Good day, good evening, good morning, wherever you are, my degenerates, analysts, and everyone pretending they understand macroeconomics. Welcome back to Trades and Gains, powered by Investor Central Club, the show where the markets are completely rational, the bond market never panics, and the Fed always does exactly what you expect. Said absolutely no one ever. Because this week is Fed week, the Super Bowl, the Oscars, and a colonoscopy all rolled into one. The S&P 500 is sitting at 6,900. Nice. And somehow investors are acting like this is fine. Totally normal. Nothing to worry about. Powell won't ruin Christmas, and there's no reason to panic. Meanwhile, the bond market is hyperventilating. Bitcoin is acting like it quit the group chat. And Powell is about to stroll in Wednesday like, did you miss me? Or do you want to kiss me? Now let's go ahead and talk about our first segment of the day. The Fed decision. The calm before the rate cut storm. Or cluster. Or whatever you're going to call it. You know, things are getting absolutely weird when Wall Street pre-prices a rate cut like it's ordering Postmates. The Fed's going to meet on Tuesday. The decision will drop Wednesday. No, we're not talking about LeBron's decision, even though that would be kind of fire to make that type of announcement. That'd be gas fire flames. Imagine Powell's just sitting across from Rachel Nichols and she goes, "So Jerome, what's your next move?" And he goes, Rachel, I think we're going to cut 25 points. I think the market would go parabolic for that. Anyways, decision drops Wednesday, and then Powell does his "we definitely know what we're doing. Please stop asking me questions" press conference. The market is already pricing in a 25 BPS cut, with the confidence of a toddler who thinks they can jump off a couch with no consequences. Yeah, Elliot, that's how you broke your arm. You jumped down the stairs and thought there would be no consequences. Now, why is there so much certainty? Well, because every piece of economic data last week said inflation is improving, but also the economy might be dying. But it also might not. But you should still have fun trading. So that's what last week was. It's like the data was generated by ChatGPT during an anxiety attack. Now, the next thing we have is the dot plot. You can go ahead and try to connect the dots, but you'll end up probably losing your mind because on Wednesday, that's when we'll get that dot plot. And it's the Fed's version of a horoscope, basically. Nobody understands it. Everyone pretends they do. And if one dot moves half an inch, Bloomberg terminals start melting down. Now, Twitter economists start foaming at the mouth, and your buddy who bought a macro course for $900 feels validated. Interesting. Now, next up, we have the Santa rally. But were we some naughty boys and girls this year? Is Santa not a big fan of us? I guess we're going to find out. December is supposed to bring us the Santa Claus rally, but Bank of America just came out like, maybe not. Wall Street wants falling inflation, a strong growth, a rate cut, no recession, peace on earth, $0 VIX, and NVIDIA to go up forever. Basically, they want all the benefits of a gym membership without, actually going to the gym. But if Powell cuts too aggressively, bond yields could spike, stocks could tank, and Santa could absolutely deck you across the face for doing that. Now, the bond market, this is where happiness goes to die. The bond market right now feels like it's meeting its girlfriend's dad for the first time. Yields are rising, inflation is improving, but it's not fast enough. And now the Fed is rotating voting members like it's recasting a reality TV show. It's like when they would introduce a new friend in the Jersey Shore house at this point. No one watches the bond market, by the way, until suddenly it's burning your house down. And then we have Bitcoin. What would be a weekly outlook without mentioning Bitcoin, aka digital gold, or is this digital take your ass home? Bitcoin this year decided to go rogue. We have stocks up 16%, and Bitcoin, it's wandering around in the desert like Moses. This is the first time since 2014 that Bitcoin is completely decoupled from equities. It's digital gold, they say, except actual gold is up 60%, and Bitcoin is acting like it forgot its homework at home. Now, we do have an earnings week. Big Tech and Costco are going to go ahead and try to save the market. This week, we get on Wednesday, Oracle and Adobe. And then on Thursday, we'll get Broadcom and Costco. The questions on everyone's mind: can cloud spending save us? Will AI budgets ever stop shrinking? Will Costco finally raise the price of the hot dog? The last one, that is the real macro risk. The hot dog indicator, the glizzy goblin indicator right there. Now, the economic calendar, we have jolts and other ways to make yourself sad this week. On Tuesday, we're going to get that jolts report, a report that tells us how many jobs are open, how many people quit, how many were fired, and how many economists will cry on CNBC. Powell watches jolts like it's his fantasy football lineup. If openings fall too fast, he walks into the press conference Wednesday looking like he hasn't slept since 2008, basically. So buckle up, all right? Put your strap-ons on and strap-ons in, because it's Fed week, baby. Markets are euphoric, bonds are panicking, Bitcoin is confused, and Powell, well, is about to walk in Wednesday like he's about to drop the season finale of America's next top central banker. Stick with Trades and Gains, and we'll help you make sense of all this, by the way. Make sure you comment down below your hottest take this week. Comment a stock that I should look into buying this week, and I will see you guys tomorrow for our midday update report. I hope you all have a great Sunday, and go Lions. Love you.